As we look forward in the world of investment, we don't know where the big picture issues or the minutiae of regulatory changes will take us. And so we have to build flexibility and resilience into our organizations. There's a little party going on down here. I might have to go sort those guys out. But we have to build flexibility and resilience into our organizations. But given the urgent demands day to day, that is easier said than done. And so we need to hear from our next panel about how we can build strength into our organizations to face an uncertain world. Hopefully, I will be able to get my panel through the crowd that is forming off to the side, because I think they're ready to go. And they are going to be led today by Albert Go. Albert is the Deputy Chief Executive Officer of the Exchange Fund Investment Officer of the Hong Kong Monetary Authority. Winging his way to the stage will be Hermes Lee, the Founder and Chief Executive Officer of Aspex Management. We have Michael J. Sachs, who is leading GCM Grosvenor as their Chairman and Chief Executive Officer. And rounding out this panel, from Citadel Securities, we welcome their CEO, Zhao Peng. And with that, the hubbub has died down, a silence falls over the crowd, and Albert Go brings his panel to the stage. Thank you.
Welcome to the panel on charting rough waters. Let me dive straight in. I'll start with Peng Zhao. Peng, welcome back. You're the rockstar CEO of Citadel Securities. Your personal journey has always inspired us. As a child, you possessed all the qualities that any Asian tiger mom could only dream about. Tall, good-looking, child genius with a high IQ. You did a mathematics degree at Beijing University, aged only 14, followed quickly by a PhD from Berkeley. And oh, you must have super high EQ too, because you worked so well with Ken Griffin for over 20 years. Sorry, Ken, I know you're somewhere out there, but this is Peng Zhao's moment. Peng, did you face any challenges at all? Were there any life-changing moments you'd like to share with us? Because it all sounds super good.
I wasn't sure there was going to be a question. I was just going to listen to this introduction for this whole session. I was hoping, but thank you, Albert, for having me back. And I think we can all feel the energy that's in the room, that's in the city, and that was in fact not a surprise. That was the word that the previous panelists came up when they were asked to describe Hong Kong. So growing up, so I grew up in Beijing, and with incredibly hardworking parents. I think they were the first generation of entrepreneurs in China in the 90s. It didn't feel like challenges, if I might be honest, but thinking back, my father actually worked in Hong Kong in the 90s. Which brought a lot of very fond memories. So Hong Kong always felt like a second home to me. And then I was effectively raised by my mom, by herself, in Beijing in the 90s. And while her having left her government job at the time and starting her own company. So there was a lot of responsibilities for a 10, 12, 14-year-old in the household. Both making sure, mom was well taken care of, grandparents were well taken care of, but also focus on the school. I think it was that kind of experience growing up in that era, combined with the exposure I really got from Hong Kong about what made Hong Kong such an amazing city, where the financial market, the stock exchange, really underpin the foundation of that. That combination, in very large part, made me who I am. I mean, I ought to say one thing that people have today that I didn't have was, despite the desire to get into finance and figuring out how to apply my mathematical skills in figuring out how to trade stocks, that wasn't really an opportunity that was available to a boy growing up in Beijing, right? In the 90s, China was still just forming its own financial market. Hong Kong already had one of the greatest financial markets in the world, just like today, but it wasn't really a available career path to get a college degree in Beijing and then come find a job at one of the top tier financial institutions. But that's what's available today. So that's yet another big change. That's opportunity that we didn't have, but it all worked out, so no complaints.
Very good. Well, Citadel Securities is now the largest market maker in the world, larger than Goldman Sachs, JP Morgan, Morgan Stanley, you name it.
It's not really a competition, but we're proud of it.
Because you're the leader. We also watched you grow in Hong Kong for over 34 years. Why Hong Kong? What advantages does Hong Kong have for Citadel Securities? Do we have enough high IQ, high EQ talent for you?
I think you're hitting on the number one reason, right? It's what Hong Kong has is this is where talent wants to be. It's really a two-sided reason, but they're strongly intertwined. I think if you talk about the quality of life, the quality of education, safety, it really is one of the greatest cities to live, build a career, plant down your family roots, raise your kids. So it's such a talent hub, and the density of talent, amount of talent that's available across technology, finances, sales, you name net management, you name it. It's unparalleled. And at the same time, the reason why it is such, it's heavily related to Hong Kong being such a business-friendly environment. We can talk about the fact that capital can flow freely. We can talk about the rule of law. We can talk about the highly accommodative and welcoming government and regulators that help businesses while regulating us. But underneath it all is this culture that celebrates risk-taking, entrepreneurship, and the industrial people. So if you're someone that is ambitious, is willing to take the risk, willing to put in what it takes to make something out of your life and make something and build a career, this is one of the best cities to be. And for that reason, together with everything else, talent is here, and therefore we have to be here.
Thank you for that. Last year, you talked about Citadel Securities' approach to AI. You said that usually takes old-fashioned automation instead of AI to get the job done. Bloomberg reported recently that you have an operations manual. We know that it's not a little red book because apparently it weighs 50 pounds and has 5,000 instructions in there. It is this meticulous, data-driven approach that has helped you beat Wall Street's giants in trading. Can you tell us more about how you set these goals for your colleagues? You don't need to spill the secret sauce, just tell us your approach.
Well, so first of all, it's interesting. Let me make an interesting observation first. I studied statistics for my PhD. We did a lot of the foundational work that led to the various different AI breakthroughs that we're seeing today. Even for me, I find it really difficult to both keep up and make the right decisions in terms of what areas of AI machine learning we should be leveraging in the business. So it's a little bit interesting to see global finance CEOs, the vast majority of whom have no background in AI machine learning, all speculating where's the future of AI and where this is all headed. Just want to point that out. But I think what I said last year remains true. The way we organize data, manage data, the way we map out our workflows and our processes, into understanding what's the input of each one of these steps, what's the output of each one of the steps, and how does that lead to either an investment decision or talent decision or a trading decision, defines a firm. Right? And that's our job. As AI tools get better, machine learning tools get better, there will be more and more opportunities for you to embed those tools and methodologies in those little boxes in your flowcharts, in your analytics, or that big book, and there may be pages I rip out and replace it with tools that wasn't available 3 years ago. But in a way, whether you write it down or not, that book of your flow, your processes, your inputs and outputs, your technology components, your talent components, that is the firm. I think we are just a bit more explicit and a bit more hardcore, if I were to use that word, in focusing intensely on exactly understanding what that is, in understanding exactly that we're all there doing. And that's driven the firm and to deliver result we have delivered so far. And that will continue to drive us forward. And AI or not, that doesn't change. And as technologies get better, including AI, I think that process will get supercharged even more.
Thank you very much. That's inspirational. I just want to say I spotted some JP Morgan and Goldman Sachs friends over there. So you might want to walk this way on the way out with us. Next, let's move to Hermes.
They're great partners of ours.
I know, I'm just joking. Hermes Lee. Hermes, you're the founder and CIO of Aspex, the most successful Hong Kong-based hedge fund that we've seen in recent years. In fact, you're so successful now you don't need to wear a tie. Now you have averaged over 30% return per annum. Your AUM grew from nothing to $12 billion US in just a few short years. And more importantly, all this was done during a period where it's impossibly difficult for Asia-focused hedge funds. So first, I want to thank you for making money for the people of Hong Kong. Hermes, you are a true homegrown talent. Can you tell us about your journey from a humble local schoolboy to this world-beating hedge fund manager now?
Well, thank you, Albert. Yeah, I thought I was only invited because I'm actually from Hong Kong. Well, so yeah, indeed, I was born and raised in Hong Kong. Now you may wonder, like, do people in Hong Kong love the brand so much that like they actually even named their kid after a bag? Well, it's actually named after the Greek god of messenger. That's before the bag became popular. But anyway, yeah. So I was born and raised in Hong Kong. I went to a local school. I did the Hong Kong certificate exam. So I did my university degree in the UK, but my entire career has been in Hong Kong, and I couldn't be happy about that. Couldn't be happier than that. Obviously, there's been ups and downs. During COVID, it was very challenging times, but now it's much better. Now we even have trading during typhoon hours. What more can you want? So yeah, it's been great, and looking forward to more time in Hong Kong.
Good, thank you very much. Now, Hermes, you also changed the way HKMA invests. Now, we tend to invest in global funds like Citadel or Peng's sister company, shall we say. But under the leadership of our financial secretary, Paul Chan, and our chief executive, Eddie Yu, we created a special portfolio just to invest in Hong Kong-based managers like you. How did you build such a successful hedge fund in Hong Kong? Did you consider launching anywhere else?
Yeah, well, first of all, my entire career has been here. We only have one office. All our staff is based in Hong Kong. So we never really considered starting anywhere else. We did consider whether we should be somewhere else too, but in the end, this is the only office that we have. And we make all our returns and everything out of Hong Kong, so I think it's a good place. Now I think, like I think Ken and everyone has mentioned, the greatest part of Hong Kong is the ease of doing business and the talent. Not only Chinese talent, but I think we have very good multinational talent as well, which is very important for our business investing across Asia. So besides Chinese, we have Koreans, we have Japanese, and I think there's nowhere else better for Asian talent than Hong Kong. This also is really the center of the region. We have the best flow of information, all the conferences and people pass through here. So I think we can be very efficient and very effective out of here. So I think I can foresee that Hong Kong will continue to be our home.
Very good. So let's talk about how you invest. After COVID, you became one of the largest shareholder of an unknown Chinese online broker. Now, many thought that you were absolutely crazy. I mean, the markets were down, no one was trading stocks. The share price of this broker had gone down 80%, and there was even a regulatory crackdown. But in recent times, the Hong Kong and China markets came bouncing back, and everybody rushed to open accounts. So this stock went up 500%. So it looks like you're an absolute genius. Now, proving once again that the line between crazy and genius is a really fine one. Can you share with us your investment thesis and strategy?
Yeah, well, no doubt, the markets have gone through some tough periods between 21 and 24, but it's really our job to sort of sift through all the difficulty and find businesses that can be resilient, during downtimes, and be able to outgrow the market a lot during up times. And Futu, as you mentioned, is one of those rare finds that we have. I wish all our portfolios are 500%, but I think having one of that has been great for us. So Futu is an online broker which started with primarily serving the Chinese and Hong Kong population, and has since expanded into regionally and globally into markets like Singapore, Malaysia, Japan, and the US. I think it's got really good products. It's got very strong sort of marketing and execution. And more importantly, I think it's really leveraged on a very important trend, which is for the Chinese population to invest or diverse their assets from likes of real estate into equity markets, for which Hong Kong is a great beneficiary of that. I think on top of that, the internationalization of the domestic Asia markets have really helped Hong Kong. For example, we've seen the sort of largest, the largest IPO this year is actually a Hong Kong IPO of CATL. And we think that, with, the advancement of technology, a lot more of the Asia domestic listed technology companies will be listed in Hong Kong as well as they look for capital internationally, which, will undoubtedly benefit the Hong Kong markets, the Hong Kong exchange, and also Futu as an online broker for Hong Kong. So I think, certainly, the market has not been easy, but the company, through these means have been able to grow their profits quite significantly over time. And it's true that, when we invested at the end of 2021, the stock is down like 2/3, and it looked very challenging. But over the years, through all their, expansion, the company has been able to grow their earnings by 3 to 4 times. And I think, so long as you're able to sit on your investment and you're investing in businesses that can grow, eventually, I think the share price will become aligned with the earnings. So ultimately, the share price is also up 4 times, similar to the earnings.
Very good. Keep those up, that's what I'll say. Okay, let's turn over to Michael Sachs. Michael, you are a very rare breed these days. A senior Democrat, trustee of the Obama Foundation, top fundraiser for the Democrats. In fact, you are the reason why Democratic conventions are held in Chicago. How are the Democrats doing? How will the Democrats do in the midterms?
Question on a lot of people's minds. We're going to have a lot more information this week. Yesterday was election day. The polls have not closed in California yet. They've just closed on the East Coast and probably closing right about now in the Midwest. The results are coming in. I think that the most important thing to watch for is both turnout of Democratic voters, which is an indication of passion of engagement, and also, very importantly, how the independent voters break, where the independent voters go. And I can say that as we were coming up here, one of the important races, the governor's race in the state of Virginia, was called for the Democratic candidate, a woman named Abigail Spanberger, first now woman elected to be governor of the great state of Virginia in history. And it was called very quickly, about an hour and 15 minutes or so after the polls closed. And it seems the independents have broken strongly for the Democrat in that race. And when we sat down, it wasn't yet called. It could be by now, and I suspect it will be shortly. Also, the woman running for governor, the Democrat in the state of New Jersey, was well ahead with about 35% of the vote in and looking like she was going to win. And that's also good Democrat turnout, but significant shift among independent voters. Interestingly, 2 women, both absolutely moderates, absolute, set down the center of the political spectrum. And the campaigns focused on 2 things. One, pushing back against the president, and that was a significant percentage of the ads that were run in the Virginia race were essentially not running against the opponent, but running against the president. And 2, affordability. And affordability, which is, I think, a roll forward of our conversations about inflation and some of the results that we saw in the elections in '24, is very clearly front and center. They talked about affordability, I think not as aggressively as the mayoral candidate in New York, the Democratic Socialist mayoral candidate in New York, Mamdani, pushes a affordability agenda, but those were kind of the themes. So there will still be a fight for sort of, I say, the soul of the Democratic Party, how progressive, how centrist. But these elections this week and what happens out in California on Proposition 50 which will redistrict California to create some more Democratic seats in response to what was done or about to be done in Texas, will have an impact on how the races are run in the fall of next year. And I think, who's in control after those races. And while it looked pretty dark for a while, I wouldn't count the Democrats out completely yet. So,
good. Switch back to Hong Kong. So, Michael, you have been one of our trusted partners in alternatives for many years now. You have also helped us build up our Hong Kong-based manager program. Could you tell us why Hong Kong is still the largest base for hedge funds and private equity in Asia?
Sure. To some extent, it's almost like a trick question to me, because when you look at it, there's really not it's not much of a conversation. It's not like a close conversation. The conversation is Hong Kong, London, Hong Kong, New York. It's not Hong Kong, other Asian capitals, and a place to base sophisticated investment operations in Asia. It's a hands-down winner. I've been coming to Hong Kong since the 90s. From the minute that the airplane would make that hard right turn to go into Kai Tak, your pulse would kick up, your adrenaline would kick up, and you would feel that the entire time you were here in the city. Literally, we were coming out here to look for investment opportunities in the early, mid-90s, and it was one of these privileges. I know I'm talking to a hometown crowd here, but where you would experience a city that actually vibrated, that you could feel the energy of the city. COVID hit Hong Kong hard. Had a lot of change. COVID hit Hong Kong hard, and I think it tempered some of that for a while. People left and pulled back on their Hong Kong operations. But it feels to me like that's in the rearview mirror, that energy is back and is very real and strong. And all of the fundamental, I almost would say like structural or architectural advantages of Hong Kong, the talent pool, the educated workforce, the quality of life. I was with somebody yesterday, they were talking that the commute has gotten up to about 25 minutes from someplace, and it's kind of a, it's 25 minutes, it's actually a commute. Come over to the United States for a while, live in one of our big cities and see what a commute is. So it is the quality of life, the culture, it's just all, there's no real, competitor in the region, in my opinion, for a service business, for a financial service business, that needs access to markets, ability to travel, rule of law is great. And so it will stay the leader going forward, in my view.
We have many important people from Hong Kong Inc. in this room. Is there one thing that Hong Kong can do better?
Well, I would say I am not the expert on what I would call the small technical improvements in markets and funds flows and things like that. So I'm not the best to speak to, go to T+1 instead of T+2, and will that really matter? What I can say is I think the Secretary just nailed it this morning, which is just keep innovating, keep this strategic view in these goals to continue to get better and better. And I think that the one country, two system policy is a very valuable one and a good one, and staying committed to that is a big deal. And to the extent that happens, it's very hard to stop Hong Kong, in my view.
Thank you very much, Michael. Okay, we have a few minutes left. By tradition, we will end this panel with some quick-fire questions. Now, the rules are very simple. Do not think on your feet. Just shoot from your hip. There are no wrong answers, because on this panel, you will be right about everything. And you cannot chicken out, okay? So, first question. What is one word or phrase to describe your outlook for 2026? So this year, Jamie Dimon said cockroaches. Elon Musk said $1 trillion. By the way, that is, he meant his pay package, not a sales target. Peng, what is one word that you will use to describe your outlook for 2026?
Busy.
Busy. Good busy, bad busy.
I think there's just going to be a lot of activities. Yeah.
Okay. Michael?
Cautious.
Cautious. Okay, good one. Hermes?
Broadening. Broadening. I think leadership to broaden from AI to non-AI, from US to perhaps more market like China.
Whoa, okay, good one. Okay, next. What is one job in finance that you believe will not exist in 5 years? Now, I think I'm going to start with Peng, because Citadel Securities has been, wiping out a generation of stock traders out there, but Peng?
Well, surprisingly, there's still floor traders wherever there are still floors. So I'm going to be this is going to sound contradictory, but I would say, chief AI officers and head of AIs, because it's like we don't have head of internet. We don't have head of mobile devices. We don't have head of personal computers. I think it would just be part of technology, right? It would be very much normalized and mainstream. So we're not going to have chief AI officers anymore. Yeah.
Oh, very good, very good. I thought you were going to say, as a US CEO, Chief Sustainability Officer or something like that. Michael?
For us, jobs that were very heavy data entry focused, we're seeing progress on that already. We have thousands of investments, and in the private markets space, reporting on those investments is anything but standard. Some administrators have standardization, and so you can get the same report for a handful, but it's different for everybody. And it used to be very, very hard to use any automation or machine learning to ease that process and with quality assurance. We've seen significant improvement in that in the last, 6 months,
Okay.
and that's going to continue.
Hermes?
Research analysts who only compound known information rather than making judgment, because AI can be much better at compiling information more accurately and faster, but only human can make good judgment.
Very good. Okay, next, without data, you're just another person with an opinion. What is the most important data set that you access or use every day and you find indispensable? Peng?
Well, it's going to be hard to resist saying it's P&L and risk. I mean, obviously, we stare at that all the time. But I think if I have to choose, I'll choose talent data over everything else. I think I can't imagine a state of the world I don't get to see my P&L in real time, as long as I can trust that I have the best team and they're working on the right things. So I think talent data for me is the one crucial thing that I cannot live without.
Okay. Michael?
So slightly maybe different answer than expected. All kinds of data for business. You're looking at your performance all the time. You're looking at your client interaction all the time. You're looking at calendars and what different people in your team are doing all the time. Lately, as I've gotten older and started to think more about the different milestones I want to participate in with my grandchildren, who are young, personal health data is something that I find myself looking at more often, including for now the last 2 months, a continuous glucose monitor mounted right under here. And I can tell you all that when you take the skin of the duck and dip it in the sugar and eat it, it tastes very, very good, but it's not the best for the stability of that graph that you get on your personal phone.
So you enjoyed dinner last night?
I love
so
fantastic.
All right, okay, good. Hermes?
Well, given how much AI is talked about today and yesterday, and given that everybody seems to have an opinion on whether it's a bubble or not, whether it's positive or not, I think the only North Star to assessing that is the ultimate demand indicator, token consumption. So I look at that to determine whether we are in a bubble or not.
Okay, very good. Okay, last one, quickly. What will be the biggest surprise for 2026? Now, last year, our panelists all said world peace. I think they came close. We have fewer wars, but not quite there yet. I'll start by saying when I tested this question, I came across a good answer. And that is, despite the appointment of a dovish Fed chair, the Fed remains independent. Ooh, okay. So maybe that's wishful thinking, I don't know. But maybe let's start with Peng.
I go back to the first answer I gave, which was, I think 2026 is going to be a very busy year, but I think maybe disappointingly, when we come back here and have this conversation again, a lot of the fundamental tensions in the system will not be resolved. We still don't quite know whether AI is a bubble or not. I think a lot of the fundamentals that is driving geopolitical tensions will not be resolved. And so there will be a lot of activities, but not necessarily resolution to a lot of the puzzles and challenges that we have in the world. So ironically, it's going to be more of the same next year, I'm afraid.
Michael?
So I'm going to give you 2 quick ones. The first one, I don't know if it's really a surprise, but I want to pander to Eddie and to the HKMA group and say that when we're here next year, we will be celebrating that Hong Kong is number 2 on the Global Financial Centers Index past London. And that's a prediction, but I don't know that that's a surprise. I think that we can see that. The surprise, I think, and this is a surprise because I don't think it's viewed as high odds, the traditional checks and balances associated with the legislative branch of the US government may re-emerge in the coming year. If these elections indicate that the Republicans are in trouble, you could see Congress, more members of Congress start to stand up and push back and require some of the oversight that is technically supposed to be taking place. And I think that is not viewed as likely today, but I think that is a possible surprise or change that we could see.
Thank you, Michael. Hermes?
I think the China market has done pretty well for 2 years in a row now, but we still see a lot of people who said, they would never invest in the China market again after COVID and after all that. I think we might find some of these people putting some Chinese stocks back into their portfolio next year. People have short memory after all, and they like performance.
Broadening. Thank you very much. We're out of time. Please join me to give panelists a round of applause.